the day it all clicks. Thank you guys for tuning in. Today's video, we will be discussing what happened the day it all clicked for me, and how long it took, and what I mean by the day it all clicks. There will be a day in which you are looking over your charts and you will see your brain will rewire itself to see clearly. For me, it took about 2 weeks. I learned to trade M and W formations, stop hunt, second leg at the high of the day. I learned to see that with my own eyes. I learned to see price, the movement of price making the M and W formations, these reversal patterns, and I was able to connect these neurons in my brain to see these patterns on the charts more clearly. So let me show you exactly what is going through my mind when I am analyzing a chart. So here we have EuroCAD. This is, any chart can be done, any pair. This can be done on any pair. Let me just break it down for you guys. First of all, I go to the settings here, and then I check mark the session breaks. These are the little lines here, so I know when the new day is and where the consolidation will occur. Now, I don't have to draw out these consolidations because I can see them with my eyes, right? You don't have to draw them out when you see them, but it is a little bit easier. But here, what I'm trying to portray here is, just by looking at this chart at a glance, I can show you what goes through my mind. Consolidation, stop hunt to the high of the day, London session, and then drop. Create the low, and then expect, when price is here, expect a spike to that low to create that W formation. Remember, if you have not checked out our previous video, it's called zone hopping. Very useful. You'll be able to see these zones here as they happen, and they happen in micro and macro scale, so you'll be able to see these micro and macro zones that happen on different time frames and have a greater understanding of the movement of price. But here again, consolidation, London session, we have the high being tested and not broken. All these wicks, that's a sell. You can sell any one of these wicks at the high. Each one of those is a stop hunt to the high. You really have to pay attention to the structure, the macro, but yet every candle tells a story as well. So think of it as the structure is the book, but each candlestick tells its own has its own story in your book. So you can sell any one of these stop hunts to the high, these wicks. During London session, you can see that small M. They came up, tested it again, and then dropped. Sell right there. Here we can see once again that drop and then consolidation in that zone. What can we expect? This area to be tested. It comes down, creates that large W formation. They tested the low of the previous day. They work off of the low but cannot break the low because there are orders trapped in that area. So they come out of this zone here, spike out of this zone to trap as many traders in this area as possible. Then once again consolidate in a single zone. London session breakout to the low of the previous day, but do not break the low. You can see that on the micro perspective. We have that stop hunt to the low. Very nice wick there. Could have gotten a perfect entry for 150 pips and then sold it again for 180 plus pips. Then what do we see here? This literally a mirror of what happened here. We can see this low was created. Then what happened? Consolidation. London session, they came up. But what do we expect? We expect a hit to yesterday's low. Not always, but why not just put a buy limit order right there with your stop loss right down here and have it sleep on it, you know? That M formation, you could have sold there, took profits down here, and then your pending buy limit order could have been activated right there. Easy pips until the next zone. Breakout of that zone London session to the low of yesterday. Don't break the low of the previous day because there's orders trapped. Yet trap as many people and then move up. Move out of the zone. So here, trap, 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 move out. The day it all clicks, you guys, it'll click. You'll be able to see it exactly how I do. M formation coming up. They work off the previous day's high. This candle is the high of that day. Look where they came. They came exactly to that high. Two wicks and a railroad track. And then the shift bar to come out of that zone. Once again, happened London session. And on a smaller time frame, this would be a very beautiful M as well. Could have taken that for 180 pips. Let's just say You stopped yourself out 2 hours into the trade. That's 100 pips. 100 pips in 2 hours. Here it is again. Consolidation. Stop hunt to the low. Second leg to the low. New York session. Breakout. London session. Stop hunt to the low. New York session. You could have taken this as a buy here, or you could have said, nah, I'll wait till tomorrow, and then the low of the previous day, you see London session, breakout to the low of that previous day, you buy right there. Did not break the low of the previous day, remember that, and then that spike up over 165 pips to the next high, to the high of the day. So this is when it clicks, you guys. It'll be so easy. Here it is once again. We can see price moved an insane amount in one day, or even you could say 2 days. It's been moving up for about 2.5 days. We can expect a retrace in price. Price can't just keep moving hundreds and hundreds of pips up. It can, but not when it's in a consolidation area. We can see price is obviously in consolidation, in a zone. So, what do we see here? The high of the day, of the previous day, was created here, and then that high was not broken. It was tested, but it was not broken. You could have sold right there. That was 2 hours before London session. A small M, second leg, stop hunt to the high, sell right there. This consolidation zone you get shifted out of instantly into profit. You wait a few more hours and then boom, jackpot. Alright, here we go again. We see that consolidation. The previous day's high, M, but don't break the high of the previous day because there are orders trapped up there. You can spike up into there, but don't break it. Sell anywhere in here, preferably at the second leg of the M, which could be considered this or this. Sell right there for a straight drop. 3 hours, 100 pips. This is all working off of previous days, you guys. I'm looking at previous structures, previous highs and lows. A lot of people are getting hung up on looking at the highs and the lows of the day, trying to figure out when the high and the low of the day is, when you can see it working yesterday's high or low. And you really don't have to complicate it that much, you guys. So, consolidation, stop hunt to the previous day's low, London session, and then straight rise. Come back New York session, work London sessions low, work the low of the day for about an hour, and then come up. Alright, let's do a crazier pair. Just so you guys can see I'm not like, I don't know, I didn't just like pick EuroCAD because it's my favorite or something. What's an exotic pair? USD, Mexican peso. Yeah, I'll show you a trade I took last night. I saw USD MXN, Mexican peso, drop quite the amount. You know, that isn't necessarily a big drop because this is a very volatile pair, but I did see the low was not broken after it dropped. So that gave me confidence to place a buy limit order at exactly 17.54. Price came down, London session, when I was sleeping, activated my buy order, and I made $300. Easy money. $300 in an hour and 30 minutes. Maybe 2 hours. I don't know, I was sleeping. Here it is again. And we could even go into macro scales too. Consolidation, breakout of the consolidation to create that high, and then you can see the wicks right at the high. M formation, triple top actually. They gave you a second leg to sell right there, and then gave you an extra just to get the snacks out of it. And then you could have sold for a good 500 plus pips in about 3 days, or you could have held 8 days for 846 pips. Obviously, if you see an M on a macro scale, it will move on a macro scale most of the time. And this is an exotic pair, but still we can see the same structures. Once again, we can see that consolidation, London session break to the high, W formation, at the low, New York session open, spike the low, and then come up back to the high of the day. Could have bought second leg, stop hunt to the low, took profit at the high of the day, and then got in a sell at this wick or at this candle for that macro M. Sold right there for 500 plus pips. About 500 pips. Here it is again. The same structures, you guys. You have to see this. M formation on the micro scale. This one was a bit of a larger consolidation area. Remember, this is a more volatile, a more stranger pair, but same concepts. Stop hunt to the high. Activate pending buy limit orders, and then hit the stop losses. We can also see the macro M. And look at that drop. Straight drop. Boom. That was 5 hours, 450 pips. So, I don't know, you guys. It clicked for me in 2 weeks. Hopefully it'll click for you as soon as possible. But what did I do? What did I do that maybe you guys aren't doing? I went and back tested it every day. I went on different charts and back tested every day, every other day. I would spend my time, my weekends. I don't go to the bars. I spend my time studying, and this is how it clicked so fast. I literally spend 12 hours a day, 12 plus hours, just studying charts. Sometimes it was 18 plus hours until it clicked. It was just click, and then it was like, wow. I had no idea this was possible. So, I think I'm gonna end it there, you guys. I mean, I could do this all day, seriously. Here is let's go on the macro scale for a second. Even on the macro, very, very large M formation right here. This took weeks to complete, months, about 3 months to complete, but you could have gotten that second leg M. I caught the second leg of the M in my sleep, but I took profit right here. Yeah, I don't know why. I could have been holding on to that trade. Could have held on for 3 more days and made 200 pips, but I took profit at like 50 pips. I have no idea why. I don't know if I didn't see this. I did see the big M, but I was just out of it at the time. I was sleepy. But yeah, here, that M formation, the second leg right into that red zone. That's the trap zone for a 200 pip drop so far. Expecting maybe 500 pips. Here we can see on the macro, once again, this M took about 20 days to complete, and if you caught the second leg, and waited 100 days, you could have made about 1,000 pips in 100 days. So this can be traded on macro and micro scales, you guys. Me, I personally, the reason I didn't, I took profit right here was because I like to intraday trade. I like to save my equity as well. I don't like to necessarily have trades running for days on end, because the commission and the swap and all that, it's a lot of paying your broker going on there. But I like intraday trading because, number one, I'm not in the trade for days and days and days. But number two, I can catch 100, 200 pips in 3 to 8 hours. I can catch these moves on a daily basis on a micro scale within a few hours. So it's just personal preference, you guys. Whatever you enjoy, whatever you feel comfortable with, that should be your strategy. So thank you guys for joining. I didn't want to make this video super long. I don't even know how long it is, so I'm just gonna end it right now. If you enjoyed the video, give it a thumbs up, share, like. Peace out. Thank you guys for watching.